Yeah, reach out to any security resource here. If you don't have a partnership with us, a relationship, it's always help desk at highpointnetworks.com. You know, Contact your account manager. If you do have a relationship with us, there's several of us here to help you with any type of security questions. But with the theme of that, today we are with our Spilling the Beans series and themes, talking about cyber insurance. And the reason for that is we've probably had more questions in the first quarter of 2023 regarding cyber insurance than we've ever had before. So we thought that would be a topic or the theme, and it's truly a pleasure and an honor to have folks attending today, and even those that will be watching the recordings. I always say that we have the smartest audience out there, and in all humility, for myself, I hope that there are some good nuggets of information within the PowerPoint today that you'll find useful. We're going to have a Q&A time at the end of this presentation. But if you have any, comments, suggestions, questions, please feel free to email me at dean.sheely@highpointnetworks.com, and I'll show the slide at the end of the presentation. I'd be happy to, answer those via email or a telephone discussion, the Teams meeting, if you'd like to talk about that, any questions offline. All right, let's get rolling. Why this presentation now? I've kind of shown some of these graphics in the form of slides before, so I'm not going to jump into them. But why this presentation now? Cybersecurity risk, as studied by insurance companies and insurance consultants, as they look across the business landscape in a number of different business sectors, cyber is always one of the top risks facing an array of different businesses out. One of the top three, usually top one. So when we talk about cyber risk and risk management, it the greatest risk or threat. When we talk about cybersecurity, since the beginning of time, kind of make information security, cybersecurity decisions. Kind of propose in
Hey,
different.
Dean.
Yeah, Brandon.
Sorry to interrupt you. I noticed it too, but I'm glad others did too. I think you're kind of breaking up on the mic a little bit. Presentation's coming through great, and I don't know if it's we're just kind of picking up little pieces here and there. It seems a little bit choppy at this point, but
Yeah, how are we doing now, Brandy? Is that a little bit better?
that's way better.
Oh, okay, fantastic. Okay. Yeah, let me fire that back up. From current slide. There we go. Yeah, so you could kind of put information security decisions in three different buckets. And those buckets are governance, the G in GRC, risk, and then compliance, right? Governance, obviously, what business leadership is saying. Risk, the traditional risk that we think about, maybe it's ransomware, cross-site scripting, things of that nature, email account compromise. And then compliance. But we have a new kid on the block that's really driving security decisions and controls. And that is insurance, right? Those of us that have policies, probably most of us, know that, especially within the last few years, insurance is almost mandating controls, right? Like multi-factor authentication is probably the most, prevalent or obvious of those. And there are new things coming in the future that we'll talk about towards the end of the presentation. But it's just really interesting that insurance is now dictating, especially controls as we move forward. The other reason for the presentation is that whether it's, policy, insurance, policy payments, premium payments, or the different controls that they're mandating, there can be a significant cost behind that. So we're going to address that and talk about ways that perhaps we can reduce that or address that, and especially how we manage or what's happening in the market with the wild fluctuations, the growth, the increase in cybersecurity insurance premium cost. One of the other drivers, right? This is an application for cyber insurance through AIG, right? 2022, very current, and it's 15 pages long, right? So the application process it seems to be much more detailed and lengthy, and we're going to talk about why that is, and perhaps some ways where you can get some help to deal with that and have questions answered. Again, this one 15 pages long. Before they used to be, 5-6 years ago, just a few pages long. All right, so the agenda presentation today is going to maybe be about 30 minutes long. We're going to talk about the what and why of insurance, the makeup of a solid policy, some things that you absolutely must have, in my opinion, the application process, using the policy, right? A lot of us have vehicle insurance, obviously homeowners insurance, and perhaps we've used those policies before. But a lot of us, I hope, haven't had significant cyber incidents. And maybe we haven't used a policy before. So what does that look like? And then we're going to end up, just maybe a slide or two, going to kind of look in that crystal ball and see what cyber insurance trends are coming down the pipeline, especially in terms of technology controls. But really quickly, the first two items on the list here, I'm probably going to spend about a quarter or a third of the presentation time on those two. So please bear with that before we get into the application process itself, because those first two items, the what and why of insurance and the makeup of a solid policy, they're really going to lay the foundation for when we go through the application process. And it might give you a different kind of perspective on what the application process is all about. All right, and then the Q&A to end that we talked about. So the what and why of cyber insurance, right? So cyber insurance is a risk management method. So whenever we talk about cyber or information security, we're talking about risk management. I mean, period. That's the reason we do it. If there was no risk, then we wouldn't, have an information security program, a cyber program, and so forth. So we're going to talk about risk, or we're going to use the term risk quite a bit today. So I just want to lay the foundation for that, right? So risk, as we've talked about before quite often, is the probability of something bad happening, like a cyber event. We kind of take that times the financial impact if that risk actually comes to fruition, right? Like ransomware or email account compromise and financial fraud that can happen as a result of that. So probability times impact. Okay, risk management, just to review, is a business function. It's a business decision, right? The businesses that we work for, the nonprofits, maybe it's government, maybe it's education, they insure all types of things, right? It could be, probably the most obvious is facilities, the buildings that we have, but there's, human resource risk, there's financial risk, there's, all kinds of things that can be insured. Probably insure a ham sandwich, right? So that is a business function, right? The business is making a decision in terms of facilities to, protect that from natural disaster or whatever. It's not the facilities maintenance people or the facilities manager that's actually making a decision on that. It's the business. And IT is the same way, right? We can advise business leadership on, kind of decisions to make, maybe amounts for coverage and so forth, but it is not solely a function of IT or the CIO or the CISO, I would say, right? It's really, C-level, CEO, the board of directors that are ultimately making the decision. So we have a few different, risk management methods. There's really probably 5 or 6, but there's 3 that we're going to address today, right? It's the reduction of cyber risk, the transfer of that financial impact if something does happen, and then acceptance, right? And again, there can be secondary risk, residual risk, there can be risk denial, so forth and so on. But these are the 3 that we're going to focus on today. Right, so here's our management methods, right? And I want to lay the foundation again before we start talking about insurance applications, the application process. I want to talk about control categories and how they line up with these management methods. So, risk reduction, we can have administrative or soft controls in regards to our cyber program. And this is policy, procedure, and documentation, right? Then we have the technology or the cyber op controls that we're all familiar with. For example, if you have patch management, maybe you're using Intune, PDQ deploy, firewall, obviously. Maybe we want to do a monitoring and reporting, so we have a SOC SIM, with 24/7 eyes on glass. And it's usually the combination of the soft administrative controls and the technology op controls that the insurance company is looking for, right? If we have a patch management program, we want the policy, the procedure for that, the documentation. It gives us, who's responsible for what, the accountability, when patch management decisions are made, maybe the schedule, if something's critical, we want to hit that in fewer days than if something's high, medium, or low, right? And then the technology is actually the tools that we use and so forth and so on. So those 2 together are really what insurance companies are looking for, especially the application process. And we're going to get into that, in a little bit. There's risk transference, right? And this is specifically where insurance comes into play. And this is, almost always protection against financial fallout. Whether you have car insurance and there's a car accident, homeowners insurance, you have a roof that got, significant hail, it's to protect against the financial impact of that. Typically it's post-event, right? If there's a car accident, that's when you use that insurance policy. There's also post-event services that come along with cyber insurance, right? It's going to be to cover recovery cost, forensics. Maybe there's a ransomware negotiator involved. If you do credit card processing, there's notification, statutory and regulatory obligations to notify customers like rapidly. You might need a call center to assist with that. Or customers might be, angry or they have a lot of questions. So believe it or not, call center can be, a part of your insurance, cyber insurance, depending on the type of business that you have, the sector, the vertical that you're in, and then also the size of the company, right? So there's some general cyber insurance principles, right? And I like to go through those, and they're super obvious, right? The more weight, resources, human resources, financial resources that you put into risk reduction, which is the prevention of things happening, then maybe the less resources or weight you need to put towards insurance, right? It's pretty obvious. And that might bring down your insurance premiums because you as a customer, as a policy holder, become less of a risk to the insurance company for them having to pay out for some type of impact that you have, right? Super obvious. The less we go on the prevention, the reduction, then the more assets, financial assets we might need to put towards insurance, right? And then our insurance policy and our premiums and so forth might cost more because we as a policy holder become a greater risk to the insurance company for them having to make a payout, right? Pretty obvious. After a breach, keeping those 2 kind of, philosophies in mind, you as a business are going to do, this is again after a breach, put more resources into reduction, right? Because you just had a bad event, leadership, reputation, It's kind of embarrassing, the reputation, the financial impact to the company. You're going to put more stuff towards reduction, and then insurance obviously is going to cost more because you've had a breach. There's been a payout, to your business. So the philosophy here is when it comes to reduction, it's kind of like you're going to pay for it one way or the other eventually. So maybe a little bit more resources to it prior to having an incident, might be a good approach or a good investment. But let me go back to, but if you're like me, I'm kind of risk adverse, when it comes to cyber or, even my personal life. So if you can afford it, you want to do that preventative risk reduction, and probably if you can afford it, some significant insurance at the same time. The makeup of a good policy, right? And then we'll get into the application process in just a few minutes. Again, insurance is transference. It's the financial impact. It's post-incident. Now, a couple things that we want to make sure that we have as a part of a solid policy is probably the second greatest risk that we have when it comes to cyber is kind of a social engineering email con artist thing that usually happens as a result of the email account compromise. And almost always as a result of that type of incident or attack is financial fraud. We've seen businesses where a supplier's email account will get compromised. An invoice is sent to a retailer, for example. Depending on the business, it might be $10,000, might be $100,000. I mean, literally, and so forth and so on. So you want to make sure that you're protected against that financial type of fraud. Because again, social engineering, email, phishing account compromise, number 2 on the list. Number 1 is ransomware, otherwise known as extortion. You'll probably see that legal term extortion come up on policy applications or renewals. When we see attacks and you look at statistics, ransomware is the result probably 80 or 90% of the time. So we're going to kind of use this as an example. Let's say that we, are experiencing a ransomware fallout, right? There's going to be downtime of operations, depending on your type of business. Maybe you're an online retailer, so orders can't be fulfilled. Let's say that you're, agriculture, it's harvest season, grain trucks need to be weighed. Perhaps they're not able to because systems are locked up, or maybe you're manufacturing, right? So systems are locked up. You need to send a couple hundred employees home for 2 or 3 days while things are recovered, right? So we can transfer the fallout of that, to the insurance company. Again, expenses, recovery, and forensics. There's going to be reputational damage. Again, we talked about notification services, maybe a call center, credit monitoring, maybe legal expenses. There might be regulatory fines and penalties as a result of that. Now, again, right, there's going to be a financial fallout potentially. Oops, hold on. Why isn't my clicker working? From all of these categories. And depending on the type of business that you are, you may not need all of them, right? So in our policy scope or a coverage that we're choosing in a renewal or an application process, we just need to be cognizant of what we need and what we don't need, where that financial impact might occur as the result of an incident. And we're going to have different levels of financial impact. Downtime and operations might be where it's at. Recovery and forensics, might be a little bit less. Reputation may be more depending on who you are, right? If you're a university that has a very good cyber program, or maybe you're a cyber research business and you, as the cyber research firm, if you have a breach, that reputation is going to be, devastating. So maybe more coverage there. Credit monitoring and so forth, again, depending on the type of business that you are. So, taking all of this into consideration, the coverage that you might need, and then the amount of coverage per category, right? Obviously, a part of that equation. Here's some interesting insurance insights regarding small and medium-sized customers. We have a lot of those on the phone today. This was a research that was done in 2021. I believe they defined small business from 0 to 250 employees, and then medium from 250 up to maybe 500 or 750, and then beyond that was large and enterprise. But anyway, 34% of respondents, 500 respondents, have been denied coverage due to not meeting specific control requirements, right? Most often it was multi-factor authentication in robust endpoint detection and response. Almost 40% of respondents aren't currently covered for any ransomware payment demands. So that's something to be cognizant of as you're applying for a policy or renewing, reviewing. Over 40% aren't covered for auxiliary costs such as court fees, employee downtime, and so forth. So again, be cognizant of that as you're looking at your policy. And then only about 20% of businesses surveyed have ransomware coverage limits above 600K. Now that might be totally legit, again, depending on the business that you are. But based on size and revenue and risk and so forth, maybe that needs to be $1 million, maybe $2 million. I worked for a small size bank in Sioux Falls, and we did a lot of business with third party, and we required those third parties to have at least $10 million worth of cyber insurance. And this was in 2015, but there can be huge fallout, if I don't want to mention the type of business that financial was in, but a lot of risk, so a lot of coverage. So how much coverage do you need? And that's the kind of the $1 million question. So there's a couple different ways to address this. There's a quantitative analysis or quantitative assessment. We're going to go into that at a very high level. And then the second way is a qualitative analysis or assessment. So the quantitative analysis, right, is a precise assessment process. There's usually a risk assessment, and a part of that that's done is identifying critical assets. But you need to look at all assets and their importance within the organization to really define if they're critical or not. It takes a lot of time to do that, and we want to get very precise about that. Perform the asset valuation, right? What is the value of that asset? And if it goes offline, if there's different types of attacks and so forth, what's the financial impact of that? And again, as a part of the quantitative assessment, we want to laser in on that, as precisely as possible. It's kind of difficult to do. Vulnerability assessment is a part of this. Control assessment, right, which can reduce risk or increase risk depending on where your controls are at. And then the probability of an event, in not just one event, like a whole array of events are looked at or plugged into the quantitative analysis. What I want to say, math function. And then the business impact assessment, right? Again, what is the financial fallout as a whole to the business? How impactful that may be. Perhaps it's not so much, perhaps it's devastating. But there's a lot of moderately, I guess, significant mathematical equations behind a quantitative assessment, right? Because at the end of the day, this is going to result in a cost-benefit analysis. And that's going to really tell us precisely how we should manage our risk. Is it reduction, through IT controls, those hard and soft controls we talked about? Is it this risk transference? Do we avoid risk? Do we try to remove the thing from our business processes to reduce the risk altogether? Perhaps. And then, there's the risk acceptance, right? And if we do a risk acceptance, we want to really make sure that that's documented in case something comes back to bite us in the caboose, that we have good documentation around that, it being that business decision. And of course, this is all financially, motivated, or it's all done within the context of that. So we can really get a result of a precise mathematical cost benefit analysis to help us decide where we should spend resources. So it's kind of difficult to do the quantitative. I would say if you want to do it, probably hire a third party, an outside firm to do it. It can take weeks to complete, again, depending on the size of the business. And it's really quite difficult for, a lot of businesses, small, medium, and even large, to do it on their own. Now, the second here, a qualitative analysis, if you want to do that on your own, you probably can do this, right? It's a lot of educated guesses. Instead of being super precise, we kind of put things in categories, right? Like high, medium, and low risk, financial impact, probability, so forth and so on. But again, we want to identify those critical assets, estimate their value. Again, just estimating, estimate major threats, right? Control considerations, we're going to estimate probability and business impact. And then this gives us a ballpark control decision. There's actually a good resource out there. I think people know what NIST is, right? The National Institute of Standards and Technology, and they give a bunch of free, I guess it's all free, cyber resources. And they actually have a risk management framework and some online tools that go with that to help businesses conduct a quantitative assessment or analysis. So that's something to look at for, most of us mere mortals that may want to do cost benefit risk analysis on our own. There's kind of a third philosophy that I came up with, so kind of take this with a grain of salt because it's not by the book, but this is kind of a worst case scenario analysis, right? So if you experience something, again, it's likely going to be ransomware. The fewer controls that you have in your environment, the greater the probability, the greater the risk. If your IT security operations are substandard, again, the greater the probability, the greater the risk. And in our ransomware scenario, just to kind of put this to practice, what I've seen or what I've experienced with small, medium, and even some large businesses is that if they experience ransomware, I'd say that average amount of time for compute in general, backend and client, and storage might be offline for 3 or 4 days. Now, your backup and recovery strategy, hardware, software, maybe you're following the 3-2-1 rule, you have some immutable storage there, you're doing NAS snapshots. Sometimes businesses can get back online in 30 minutes or an hour. But if those aren't in place, right, this is worst case scenario analysis, maybe figure 3 or 4 days. The other significant component, because, information security is all about information, it's all about data. And if significant, valuable, regulated, or statutory protected data was exfiltrated before the ransomware took hold and things were locked up, then there can be a significant cost or impact as a result of that. So if you kind of put all of this into consideration, again, you can figure out, well, maybe I want to put this much money towards risk reduction, transference, or avoidance or acceptance. So we kind of have really 3 different philosophies that we can use to choose a policy in the coverage that we need, the amounts that we want covered, the amount that we can pay for premiums. Okay. Oops, those are all financially motivated, obviously. Okay. I want to say this before we get into the application process, right? There's some things that you must do now when applying or renewing a policy. Again, we want to make sure that ransomware or extortion is covered, right? And perhaps even the payment for the ransom, because believe it or not, in some situations, paying the ransom might be the right thing to do for your business. But you want to make sure that ransomware, it's usually called extortion in legal language, is covered. And in addition to reading through your policy, I mean, literally get on the phone with somebody and understand that in plain English, right? And then we talked about the social engineering fraud that happens as a result of that. We want to make sure that that's covered as well. Okay, the application process, right? So the casino business model, right, is that this is how casinos operate. So the pay-in from the customer must always be greater than the casino has to pay out, right, to the person playing the game. And it's very much the same with the insurance business model, right? They need clients to pay in more, always, right, than the insurance company is paying out to customers, right, in the form of claims. So when we go through the application process, just be very cognizant that the application process isn't so much about you, it's about the insurance company and how they look at you as a risk, right? Okay, I think that's pretty obvious and makes sense. So in the past, right, the application process, short and simple, couple pages, the questions are pretty ridiculous, right? Even as recently as maybe 2017. Again, the AIG one that I showed, 15 pages long. Why is it so long? Because the more that the insurance company understands about you, right, the better that the insurance company can control their risk of having to make a payout to you through a claim. So that's why these are becoming longer and longer and longer and more detailed and more sophisticated in the questions that they ask. So the major application categories are, they want to know the financials of your customer, of your business. We'll talk about that. Data security and continuity of business, identity, which would be credentials and access management. Really quick, a note about this one. Identity, credentials, and access management on the AIG application form is 3 times longer than any other category that we're going to talk about, right? So we can infer from that, we can deduct from that, that identity, creds, and access management may be the greatest risk to the insurance company. Might be your greatest risk as well. It's kind of a takeaway from that. Security monitoring and response is big. Risk management, phishing defense, and malware defense are the major categories. Also, for each application question or category, again, they're really looking for 3 things. They're looking for that risk reduction through the soft controls, the risk reduction through the hard controls, the IT, security, hardware, software, and cyber operations. And then they're also looking for reporting, right? Reporting can be the alarming, the monitoring, and then also kind of, a record of what's happened in your environment. Number one, to prove that you're doing the things that you said you were going to do, right? And then also in a recovery process, reporting is critical because it can help stop the spread and understand the attack, the kill chain, and so forth and so on. Okay, let's get into, we can skip that. Let's get into the application process itself. So the financials, what are they looking for, right? Revenue, just general. They want to know if you have a significant online revenue pipeline, because obviously if there's a cyber attack, that's going to be significant to your business. They want to know the type of business that you are. Medical, energy, financial, technology. Different industries have greater risk, the greater probability of being impacted by something. And then there's different, maybe levels of payout depending on industry. And then again, they're going to do a kind of a control assessment, control questions. And there's anomalies in different business verticals. For example, education has one of the worst click rates out there. Medical has the absolute worst by far accidental disclosure of information. So like medical, they want to know if DLP is in place and data inventory, discovery, access control. So, they'll kind of ask the questions and correlate, and that's going to result, in different premium amounts. Data security, continuity of business, right? They want to know if you have an information security program or policy, right? Like a school district might have an athletic program, right? They want to know that the whole thing is working together. And have you developed that? Are you operating that in-house, or is a third party doing it for you? Third party seems to be getting really popular, especially for small and medium-sized businesses. Are you aware of your assets, right? Hardware inventory, software inventory, data inventory. We see a lot of times where the businesses aren't aware of the assets that they have, and there might be one hanging off the internet that hasn't been patched in a long time. So that's important. Vital assets identified, portable media management, disaster recovery plan, RTO, RPO, right? We talked about how backup and recovery can significantly impact your restoration times. So they want to know that. Co-location, are you geo-redundant? That's kind of all about the financials. Again, identity, CREDS, access management is a huge one. Sorry, got it. Clicked on a button here. Who's your identity provider? Do you have a user inventory, especially service accounts, highly privileged accounts? Are you using MFA? That's a critical one. Remote access, password practices. How do vendors authenticate to your environment? And what are the risks there? Do you have local users running as admin, or root? How do you do elevation or escalation of privileges on your endpoint? Is there technology control around that to make sure that it's done responsibly and that access is taken away when it's no longer needed, right? So some major questions or families within that category. Security monitoring and response, this is becoming way more popular than it used to be. Insurance companies are wondering if you have eyes on glass 24/7. Are you monitoring identity events, logons, password changes, group changes, entitlement changes is what that results in? Do you have a DLP solution, right? Again, it's all about data. Are you keeping it within your environment, or can it leak out? You doing monitoring on the firewall, on the endpoint? How quickly can your cyber operations respond to something that's seen? Is there log retention, SOC SIM validation? Do you have an incident response plan? All of these factor into your risk to the insurance company. In general, the insurance company wants to know if you have a risk management program. Are you doing vulnerability scanning? Patch management. Can you report on systems that haven't been patched? Can you report on systems that maybe don't have a patch management agent on them? Can you report on how many systems have been patched and aren't patched? Do you have an acceptable use policy, an insider threat program, right? These are all components or parameters that they want to know about, again, to understand your risk to them, the insurance company. Phishing defense, right? Absolutely critical. We talked about how it's number 2 on the risk list. Phishing testing, phishing campaigns can reduce click rates dramatically. Awareness training can as well. Do you have content filtering, email firewall protection, obviously. And then malware defense, right? That's pretty obvious. But they really want that to be monitored 24/7. The new one also is kind of the application allow listing, which used to be called whitelisting, and application ring fencing. Now, both of these used to be really difficult to do, but they become much easier. And it's kind of a new philosophy where instead of looking at an endpoint or a server and just saying, hey, you can run everything, and we'll look at it at time of execution and try to make a decision on whether it's good or not, right? The new philosophy is that, hey, we don't want any software to run unless we approve it, right? Now, that's always been difficult to do again in the past, but it's become much easier. Network segmentation, RDP, blocking that on the client. These are all big ones, right? They want to know about them. Now, again, 15 pages, more sophisticated, questions that, might not be familiar with people. If you need any help with filling out an application, I can certainly do that, especially kind of onesie, twosie types of questions. If you need more intensive formal help, maybe going through the entire application process, let your account manager know. Or if you don't have a relationship with High Point Networks, ping the help desk and we can set up an engagement to help you through that. Now, we can't suggest on coverage as far as dollar amounts go and so forth, but we can definitely help you answer control questions, and then may ultimately help advise on which controls you can put in place to help reduce your premiums and so forth. So actually using the policy, right? These are must-dos before you have an incident. Now, I know this sounds silly, but it's absolutely critical. Must-do number one, know your insurance carrier's phone number, right? So now if my daughter got in a car accident, she would call 911 for help. If you have a cyber incident, you need to know your insurance carrier's phone number and call them ahead of time. Do a little fire drill, they call it, or a tabletop exercise to say, hey, insurance company, I'm calling you, we're pretending we have an incident, calling you, contacting you, now what do we do? And, a lot of times the process after that is really smooth. However, there are some times where it's a little rough and a little kludgy. So you want to know about that ahead of time. Number two, and this is not a salesy thing, but know High Point Networks phone number, especially if you're a current customer, because we can help you kick off this process because we've been through it before. And this comes back really to using the policy. And I would call High Point Networks first. We do incident management and recovery, but we don't advertise it because it's not, what do I want to say? It's not a core part of our business as far as, wanting to gain, what do I want to say here? Revenue or anything like. We do it because it's ethically the right thing to do. We can really help our customers out. Some thoughts is that we likely have access to your network. We likely know your environment better than any other third party would. And we're likely available to act immediately. Sometimes this is not the case with your insurance company's recommended recovery and forensics team. Number two, High Point, again, we've been on a handful of these insurance calls, these initial insurance engagements as a result of an incident. We can help you through that first phone call, help you work through the incident. We can really shepherd you and I hate to use the word hold your hand, but we can make sure that things are done well, things are done right, and things are done as quickly as possible. Then at that point, HPN, our incident leader, can be on the call as well as the insurance company talks about recovery and forensics team and who they want to do that and so forth. Some crystal ball trends. This is our last slide of the day, but an important one. Insurance policy costs seem to be stabilizing. They're more predictable. And again, that's because the application process has become richer and more sophisticated. They kind of fluctuated wildly when the insurance companies did not understand your risk to them. So the statistics out there show that that they're stabilizing. Current insurance-driven controls, right? We kind of talked about that in one of the first slides. MFA is definitely being driven or required by insurance companies. If you don't have it in place, your premiums will be, likely so high that you may not be able to get a policy, or maybe the insurance company will flat out, deny your coverage if MFA is not in place. The new kid on the block is this managed SIM or security operations center, this 24/7 eyes on glass and so forth. This is brand new, but in the state of Missouri, specifically education, higher ed, and K-12, a lot of cyber insurance policies are requiring in the state of Missouri, K-12, for folks to have a SIM or a SOC in place. But once this gets a foothold in environments out there, it's going to, go into medical, financial, and then, down to, all other industries eventually. So be aware of that as far as future trend and looking in the crystal ball. Really speculation here. Identity and access management, right? Because on the application process, again, it's 3 times longer than any other category. I think controls around identity and access management are going to be big going forward. When does that actually take a foothold? I'm not sure, but probably soon. Again, we talked about the application allow listing and application ring fencing to control the behavior of an application if it does get infected, if it does get possessed. Those 2 are new on the list, but it's really significant, especially, again, this zero trust, this deny first type of philosophy that's gaining hold. These 2, I think, are going to be big. And then lastly, data management, or DLP, right? At the end of the day, it's all about data. If you have an incident, the one question that the insurance company, that legal, that law enforcement, that everybody else asks, there's one question they ask: what happened to the data? And a lot of times we don't know, right? I'm guilty of that too, right? So I'm not being a hypocrite here. Eventually, folks, all of us need to get a better handle on what's happening with our data, or at least ensuring that it's not leaving our environment. So I think DLP will be big. Okay, Brandy, I always go long. I think we're, 45 minutes or so, but I want to leave a little bit of time for Q&A. If people want to drop a note in the Teams chat, there's the, text bubble right up at the middle of the screen, or, if you want to email me offline after the presentation, I can definitely get back to you with the questions you might have. Brandy, with the presentation thing going on, I really can't read the chat. So are there any questions in there right now?
Yep, I don't see any in the chat, but those of you who are on, if you do have a question, you just feel free to unmute yourself, or you can post it right in there. We'll give you a little bit of time here. Thank you, Dean, for your time today. That was extremely informational. Yeah, great information that you covered today. So again, I don't see any in the chat at this time. People might feel maybe more comfortable reaching out to you directly.
Yeah.
Or, I would just put that out if you have a dedicated account manager and you want to maybe follow up or have a further conversation. Certainly that is an avenue that you can take. All of us here at High Point are ready, willing, and able and available to, answer any questions that you might have in relation to this and or anything related to this, security, IT. So yeah.
Yeah. And we'll maybe take another 30 seconds here, Brandy, but, just in closing to the audience out there, if you have any suggestions, questions, anything like that, absolutely let me know, or let your account manager know. And in addition to that, as we do more of these presentations and seminars, please let me know, or let marketing know, let your account manager know the different types of topics or subjects that you would find, valuable for discussing. And, we'll absolutely aggregate those in a prioritized type of way. We'd love to build presentations and conversations around those. So again, any type of feedback, please let us know as well.
Absolutely. And I did put the marketing, if you want to reach out to marketing, if you have any ideas, presentations, etc. It's just marketing@highpointnetworks.com. So you can certainly reach out to me as well. But want to thank everybody for your time today. Again, Dean, sincerest thanks to you for presenting, being the lead on this series. We certainly appreciate it. And again, everybody have a great rest of your week. And we appreciate you guys joining us today.
All right. Thanks, everybody. It's an honor for you guys to be presenting to you. We really appreciate it. And we'll see you next time.